Hello, welcome to the Sunlight Podcast today. Today, I want to talk about why tracking your expenses saves you more money than you think. The subtitle, Understanding Self-Employment Tax. So, what is it that you are experiencing? A lot of us have this experience when we have a Schedule C. So you're self-employed and you file your freelance or self-employment activity on a Schedule C. That's the default. So you probably are doing that. You get this, you look at your tax return and you're like, oh shit, why are my taxes this high, right? You might have looked at your marginal tax rate at some point and seen that it was around 20%, but then you see when you add in your self-employment tax that in fact, your average rate is more like 30% or 40%. I see this all the time. So you get that feeling like, oh my God, what's happening? What's going on? Why are my taxes this high? The reason is self-employment tax. That's the culprit. So I know that you want this to feel really easy. You want to be getting all the benefits. You're running a small business essentially when you're self-employed. You want to be getting all the benefits you can, but you need to understand your taxes in order to understand how to get tax savings. So I want to help you. Today, I'm going to lay out some math for you. I'm going to talk about what $10,000 in business deduction tracking saves you in taxes. Okay, so I just want to get really concrete by showing you the tax savings of tracking an extra $10,000 of business deductions. Got it? All right. Now, what's really important for you to understand here is as I dive into numbers, doesn't always make for the greatest podcast listening. I don't want you to get caught up too much in the details of the numbers. Really, what I'm trying to illustrate is a big picture concept, an amount of savings. Okay. All right. So let's get started. Let's take an example of a person who is making $50,000 in profit reported on a Schedule C. Just so you're on the same page with me, the Schedule C is simply the part of your individual personal income tax return where you put the profit from your freelance or self-employed activity, right? Your small business, your sole proprietorship, your single member LLC. So it's going on a Schedule C. Now, if you make $50,000 in profit and it's all in a Schedule C, you are in the 22% marginal income tax bracket. That's just a fact. Now, the marginal income tax brackets, I'm just going to take a detour here and tell you what that even means. When you look at that tax bracket, it's a little misleading. I think people misunderstand what tax brackets mean. So let me just back up a little second and explain it. So we have what is called a progressive income tax system in this country. And so you can kind of think of it like a layer cake, right? So you've got all these different layers of the cake. The bottom layer that all of us have, right? Everybody is taxed. So each layer of your income is taxed at a different rate. So you don't have one rate, you have many different tax rates through different tranches of your income, all the way up until your very top dollar. Your marginal tax rate, that thing we call your tax bracket, all that's telling you is what your top dollar, your last dollar of income is taxed at. That tells you nothing about your first dollar. And I'm here to tell you your first dollar is taxed at a rate of 0. So if you want a refresher on itemized deductions versus the standard deduction, I want to refer you back to episode 10, where I clarify all about what that is, but I'm going to reference it here now. Every taxpayer has their first chunk of income tax-free. And that amount for most of us, 90% of us, is called the standard deduction amount. If you're single in 2022, it's $12,950. So your first $12,950 are taxed at a rate of 0. Okay, that's true not just for those of us making under $12,000. That's true for you, me, Oprah, Warren Buffett, name the richest person you can think of. It's true for them too, right? It's just that they're making quite a bit more than $12,000. So they continue to have different slices of income taxed at higher and higher rates. And theirs keeps going way past the point where yours stops, right? And their marginal rate might be up at the top level. Okay, So this is why when we talk about taxes, a far more accurate way to think about what your tax rate is to think of your average tax rate. Now, generally speaking, on your tax return, you can find your average tax rate. There's usually a summary page, whether you go through an accountant or you use tax software. There's usually a summary page, and it will usually tell you both your marginal rate and your average rate. And I'm just here to say the average rate is really the one that helps you more kind of understand what you're actually paying. All right. So with that baseline set, let's talk about a person making $50,000 of profit with a Schedule C. That's all going on a Schedule C. Okay. So at $50,000, I used a little tax chart cheat sheet here to tell me what the tax on that is. And it's about the federal tax on $50,000 is about $6,749. Okay. Now, if you are very quick with a calculator, you may realize that $6,749 is not actually 22% of $50,000, even though someone making $50,000 is in a 22% tax bracket. If you actually do the average, you'll find that $6,749 is actually 13.5% of $50,000. In other words, I'm just going to illustrate for you for a second that this person is actually paying an average tax rate of 13.5% federal income tax on $50,000, not 22%. So here's an illustration of the tax bracket being a little misleading and the average rate being more clarifying. Okay, but we're not done with this person's taxes. So that's their federal tax, about $6,700. We're not done. The fact is, when you're self-employed, when your income is reported on a Schedule C, which it is when you're self-employed or have a small business, then your income is not simply subject to federal income tax. It's also subject to self-employment tax. In fact, a kind of major role of the Schedule C in the first place is actually to calculate your self-employment tax. Your self-employment tax is 15.3%. Now that is true of all of us who have self-employment income, okay? We're all in the same rate. So self-employment tax, just in case you don't know this, self-employment tax is actually you as a freelancer, self-employed person, sole proprietor. This is how you pay in to Medicare and Social Security. So of course that does mean you have a right to draw Social Security in your old age and Medicare as well, because you are also paying into it just like an employee is. But a really important thing for you to understand is that employees pay it in a different way, right? They have 7.65% of their pay out of their paycheck withheld by their employer every single pay cycle, and that goes to their portion of Medicare and Social Security. So that's all that they pay out of their pocket. However, when you're an employee, your boss pays the other half. So the boss is paying into that individual employee's Social Security and Medicare account at the same rate. They're paying exactly the same amount that the employee pays. That same 7.65% of that employee's pay is going in. When you add those two numbers together, 7.65 plus 7.65, that equals 15.3. So now you understand why self-employment tax is 15.3% of your profit every time. That's because you are not just the employee of your business, you are also the boss, right? So you pay the employee half of Medicare and Social Security, but at the same time, you also pay the boss half. Okay. Now, before you go and scream and say, it's not fair, I hate it, I want you to understand that if you're an employee, you're taxed on all the income you make, right? No deductions, zero. Okay. So yes, you pay half the amount for Medicare and Social Security, and somebody else is paying your other half, but you don't get any tax deductions, none. Whereas when you are self-employed, you get the boss benefit as well as the boss obligation. So this is really good to know, right? So yeah, you pay twice as much towards Medicare and Social Security. You pay the employee half and the boss half too. But your boss half is actually deductible just the way it is for the boss over who has an employee. And you get expenses. You get to take deductions, okay? which employees don't. So you are getting a really big benefit, even though you also have the obligation. Okay. All right. So that's self-employment tax explained. It's 15.3%. And unlike your federal income tax, which doesn't even kick in until after you make the standard deduction amount. So after, if you're single, that will be $12,950 in 2022. That'll go up a little bit each year after that. You're going to pay 15.3% self-employment tax basically on $1 of your self-employed income. Technically, you don't pay it until you make $400 of profit, but you have a little grace period. But essentially, you should just think of it that you pay self-employment tax on all of it, all the profit on that Schedule C. So what that means is this person who's made $50,000 profit on a Schedule C, they're paying federal income tax of $6,749. They are paying self-employment tax on top of that of $7,650. Okay. So your tax that you're paying is not just your federal income tax on that money, it's also the self-employment tax. When we add those two numbers together, we get $14,399. So almost $15,000 of tax on $50,000 of profit on your Schedule C. Okay, got it? So that is why if all you were thinking about was your federal tax rate, you're going to estimate your taxes too low, and you're going to get that punch to the gut feeling of, oh my God, wait, what? Why are my taxes so high? So I'm trying to explain to you why that happens and what's going on. Okay, now here's the thing. Self-employment tax is really important, right? We want you paying into Medicare and Social Security. That's important federally, like that's a national priority. So it's really important that you do it, and you're going to have to pay it no matter how low your income, right? So you could actually be making so little on your Schedule C that you don't owe any federal income tax. Well, self-employment tax, you're going to owe anyway. You are going to owe it. So just really important to factor it in. It is why, it's why tracking your expenses really saves you more than you think. So what do I mean by that? So when you track your deductions, so like I'm saying, you do have to pay the boss half of Medicare and Social Security, but you get this boss benefit of being able to deduct expenses from your profit. In other words, you as taxpayers are subsidizing your expenses, your business expenses. It's kind of amazing. So what does that actually look like? Well, it's really important to understand that there are a lot of things that you can get, that will be deductible and that will take taxable income off your tax return. Things like putting money into an IRA, for example, and those things will lower your federal income tax, and that's awesome. But nothing will lower your self-employment tax except for deductions. Okay, so we have now established that this person making $50,000 has a 28.8% tax rate, because that was a 13.5% rate plus self-employment tax, which is 15.3. So 28.8, let's just call it 29. So that person is paying 29% tax on their profit, right? Might seem a little high. The thing that will lower both that 13.5% federal income tax and self-employment tax, the only thing that will lower both amounts of tax is tracking deductions, reporting deductions on the Schedule C. So in case this has not hit home with you before, I would like to really drive it home now. Tracking every deduction for your business saves you more money than you might have realized it does. So that's the big deal. Okay. I said a lot of numbers. You might not have caught them all. You can go back and repeat, or you can just take this takeaway, which is tracking your deductions saves you both federal income tax and self-employment tax at the same time. So it has a bigger impact than you probably in your head calculate that it does. So you don't want to miss deductions. You want to have a system set up where you track everything, right? Where you never miss even the small stuff. So let me just give you an example, and I'll get into some numbers again, but then we'll summarize again. Okay. So let me give you an example of a person, the same person who has this $50,000 of profit reported on their Schedule C. What happens when they dig up an extra $10,000 of deductible expenses? Well, their reportable income is actually going to go down to $40,000. Their federal income tax will be on $40,000, and self-employment tax will be on $40,000. By contrast, if this person had put $10,000 into a SEP IRA, for example, it would lower their federal income tax by $10,000, but it would not lower their self-employment tax. Now, you should still use a SEP IRA. They're still wonderful, but I'm just saying I'm trying to illustrate the power of deductions right now. Okay, so $10,000 more in deductions does what to this person's taxes? Well, $40,000 of income, now this person moves from a 22% tax bracket to a 12% bracket. Now, I illustrated to you that a tax bracket, your marginal income tax rate, is not the same as your average rate, and that looks like a big jump, but it's not as big as it looks. However, it's still something. So 12%. So I use my little handy tax chart over here to calculate what their federal income tax is, and it would be about $4,600 on $40,000. So that's down from $6,749. Okay. Fairly large savings. So not only are they taxed on less money, $40,000 instead of $50,000, but their average tax rate actually went down. So we went down from 13.5% to 11.5%. So not only is their tax going down, but their tax rate is going down. So that's really important, right? That's a big savings just on the federal tax side. And of course, IRAs, they're only going to help you on the federal tax side. And they do that. It's a big deal still. But we're also going to save self-employment tax. So again, that rate is steady, 15.3%, always and forever. The self-employment tax on $40,000 is $6,120. That's down from $7,650 when they were reporting $50,000 of income. Okay, so our total tax here, federal income tax plus self-employment tax, is $10,721. And before, when we were reporting $50,000, it was $14,399. So we have gone from a 28.8% average tax rate across all of the federal income tax and the self-employment tax, 28.8% rate on $50,000 to 26.8% on $40,000. And in just dollars, this person has saved $3,678 in tax. Okay. $3,678 in tax savings from $10,000 of deductions. They are getting almost $4,000 back in their pocket after spending $10,000. That's a really big savings. I just want you to clock that. Okay. So you don't have to remember every number here, but I do want you to understand that those deductions are really powerful, right? Really, really powerful. And it's important you don't miss them. You want to have a system that captures even the little stuff, taking a client out for coffee, capturing that, getting your driving mileage, capturing that. Okay. So it's really important to understand that. And I also want you to know that there's stuff that does not come out of your business account. So there's money that you get to report as having spent on your tax return on your Schedule C that actually never came out of your business account. This is kind of amazing, right? So we talked in a recent episode about the difference between your books and your taxes. And so you can go back and review that to understand why these things can be a little bit different. But your deductions include more than the stuff that is straightforward and that you get a receipt for, like your supplies. Your deductions actually include a host of things that are mixed use between personal and business, like your business mileage, like your per diem meals expense if you travel for business, like your home office. So those three things that I just named, those will actually lower your taxable income even more, even though your bank account doesn't show that that money went out. So That is kind of golden and amazing. It is really important, though, that you have a good bookkeeping system set up so that you are tracking those things like per diem meal days, mileage, and your home office, because those give you an even bigger tax reduction. All right. Now, what do you need to do? Now, if you have not already downloaded my visual guide to your tax deductions, it's free. It's beautiful. It's a one-page reference guide that has actually all of these rules just written right out for you. I highly recommend you get it because it's designed to be super useful to you. You can get that now, and you can start tracking those things outside of stuff that hits your bank account, like per diem meals, like mileage, like your home office. You can start tracking that today so that you get a bigger bang for your buck and save more money on taxes. You can get that at sunlighttax.com/deductions guide. So just one more time, sunlighttax.com/deductions guide. Deductions is plural. So go ahead and get that. Click on the one that fits you best, print it out, stick it by your desk where you do your bookkeeping, and you will have it there for you and you can set it up. The other thing I want you to know is you need to set up bookkeeping and your bookkeeping system to make sure that you don't miss the small stuff. Because like I hope I illustrated for you, the small stuff adds up and the tax benefit is bigger than you think. So I'm giving you a way to solve this problem right this minute. If you download that that visual deductions guide, you'll have a way to kind of get that all in your head and understand what the methods are. Okay, so let's just summarize. Here's my takeaway for you today. If you've been having that feeling like, oh shit, why are my taxes so high? There is a corollary to that feeling, which is when you get every single deduction, even the little ones that you are entitled to, you save more money on taxes than you realized you did. The benefits are really big. Okay, so your next step is to set up a simple system to keep these expenses organized so that you capture them every year as you do your taxes and get the extra savings. Now, in my program, Money Bootcamp, I teach a spreadsheet bookkeeping system. I also teach how to, basic principles of bookkeeping for if you do software. But my system, we track all of these things together in one place, including those things that aren't coming out of your bank account, like your mileage, your home office. And I think that's really important to have those things all in one place so that when you do your taxes, it's all there for you and you don't miss it. Because I'm a tax person, I'm really oriented to using your bookkeeping, not just for your business, but also to make your taxes easier, since they become the basis for how you do your taxes, though they're not completely aligned, as I've discussed in an episode earlier. So that's how I teach it. I'm very oriented towards calculate these particular expenses this way and this way. So you can always get the bigger, because for your taxes, you get to take the bigger one. So we always want to see visibly which one is bigger, right? That's my system. Okay. But you can get started. So, if you one day decide that Money Bootcamp is a good fit for you, that you're ready for it, that is available. But you can get started right now just by downloading that visual guide to tax deductions and seeing what those rules are and beginning to track home office and mileage and per diem meals expense. Cool. So what do I want to leave you with? When you understand how your taxes work, then you are able to turn the dials and increase your savings and really take advantage of the benefits that are built into the system for you. So no joke, you are a small business, right? And there are a lot of benefits that we give to businesses, even micro businesses, in this capitalist system that we live in. And you absolutely get to take them. You are absolutely entitled to them. You just have to understand what they are. Now, bookkeeping is not the end of these deductions. I was trying to show you in today's episode how valuable getting every deduction is, how much actual savings you get out of it, and how the savings is bigger than you probably thought. When you add in other stuff, right? I think that's kind of the baseline of understanding. But then when you go even deeper into understanding, how your taxes work, you get to understand how tax savings works, right? So there's other stuff that comes next, like retirement accounts, like year-end tax planning. And those things can help to boost your savings even more. So I hope you enjoyed this episode in the Money School series, which am so excited about and having a lot of fun with. And I want you to know that if you're listening to this as the episode drops, I am offering a free live class on November 16th. And you can learn more about it in the ad that you're about to hear. I'm going to be teaching you what you need to know, the systems you need to know, and how to take advantage of all the tax goodness that exists for you. All right. Thank you so much for listening, everybody. Bye.